Welcome back, ladies and gentlemen, for another YouTube video, all in crypto here. And today we've got an interesting one lined up for you. We're going to be covering the main news of the week, really. But this has been something that's been ongoing for a while now. And that is to do with Silvergate Bank, the kind of bank for crypto institutions. Actually, Silvergate had been invested in by the likes of BlackRock. You know, they were very much a sort of poster boy for banking and crypto. And of course, they've come to an abrupt end. This is the message on their website. Effective immediately, Silvergate Bank has made a risk-based decision to discontinue the Silvergate Exchange Network, SEM. All other deposit-related services remain operational. So SEN is a big deal because SEN's kind of how the likes of Coinbase, Fidelity, Bitstamp, you know, there's a long list of them, Binance, almost communicated and transferred with one another. A lot of the clearing went through Silverbank. So Silverbank actually has played quite a big role. And I really want to talk to you guys today about, you know, what Silverbank is or was, still is, I guess, and why it failed and sort of cover that situation. How much of a big deal is it is a question that I want to really get into. We'll look at a number of other things like the fact that we also see JP Morgan cutting ties with Gemini. Are Gemini, you know, under some sort of issue or going through some sort of issues? Well, we know what happened with Genesis and so on and so forth. There's some really interesting things coming out about that. But I want to just start the video off before we get into all this with going back and looking. We covered this as well on the channel. Guys, it's crucial that you subscribe to a channel such as this one because we bring you real daily cryptocurrency related content that you just don't get elsewhere. But I want to cast people's mind back to March the 9th. You know, this is when we got out the cryptocurrency market largely. And there was a executive order that was signed by Biden. And it was essentially to ensure responsible development of digital assets. And at this point, you know, we were around about $3 trillion market cap. We're now just under one with the current price action. But it sets out a kind of, specifically the executive order calls for measures. It says protects US customers, investors and businesses, protect US and global financial stability and mitigate systemic risk. There's an element of that taking place right now. You know, we've seen actually dollar competitors get taken out pretty swiftly, mitigate the illicit finance and national security risks posed by the illicit use of digital assets. We're seeing this sort of come into play and promote, and this is the big one, guys. This is what I think is going on with regulations right now. Promote US leadership in technology and economic competitiveness to reinforce US leadership in the global financial system. Now, if you look at many of these crypto firms that have toppled over, they've been offshore. They've not been within the US. And there's this, you know, I don't think that they're promoting the US's leadership by going after these companies because they're just going to go elsewhere. But what they are doing and what I believe is going on right now is there's a controlled demolition by these agencies of the cryptocurrency space so they can bring it under their jurisdiction. So they can go, yeah, we told you so. You know, you can't have your own markets. We need to tell you what markets you can and can't have. That is exactly what is going on right now, ladies and gentlemen. They know as well as I do, and I've known for nearly 6 years now, that this industry is going to change the very way that we do things in day-to-day life. Payments, you know, identity. Blockchain is going to be the underlying technology that runs pretty much everything, certainly in terms of operating systems of tomorrow. Okay, and they know that as well as I do. And what they're doing right now is trying to bring it under their jurisdiction to ensure, just like they've done with the dollar and currency, that they stay in the position of power that they're in. I 100% believe that Sam Bankman-Fried was a Trojan horse and that he was set up to fail. And if you look at, and Sam Bankman-Fried involvement and FTX involvement is with, you know, you can see one reason Silvergate failed is because of that involvement. So I believe he was 100% a Trojan horse. And you're seeing, I think I just took myself off the screen. You're seeing the kind of still living through the repercussions of this. And actually, if you look at a kind of institutional side of things, all the institutions, your JP Morgans, your BlackRocks, all they want is regulatory clarity so they can come in and be active in this space. And this is what's happening. There's very bullish undertones to all of this in terms of the industry and where it's going to go. You know, in somewhere like the US, we need regulation to propel this industry from a 1 trillion to a 10 trillion or 100 trillion, whatever it ends up at. And that is coming, and it's coming at a, you know, it's like a snowball. It's been rolling down the hill, and now it's reached a real mass and speed, and we're heading into regulation. And I do believe we're seeing a controlled demolition of the cryptocurrency space by the likes of the US in order to bring it under their jurisdiction. It's probably coordinated, but this is honestly what I think is taking place. And Silvergate was one of the big ones to sort of take a tumble, obviously following, and we covered this, Silvergate sold assets at a loss and cut staff to cover a $8.1 billion in withdrawals. So they essentially had a bank run to the tune of $8.1 billion and tried to make whole by, you know, I even think BlackRock invested in them during this time period, to essentially try and make whole the bank run and the customers. And unfortunately, there's just been a kind of cascade from FTX. The FTX debacle has triggered a bank run on Silvergate, causing the company to sell off its assets at a loss and cut staff by 40% to cover $8.1 billion worth of customers' withdrawals. So at least they tried to make whole on that, unlike FTX. You also have Silvergate, were the people that tried to buy Facebook's DM, failed DM project, more like told they couldn't do it by regulators. So you have regulators and the powers that be right now trying to bring crypto under its control, and taking out these big players is part of it. You know, Binance have such a target on their back. You know, the fact that they even have some sort of involvement in the FTX crash or a link to that is a slight worry. But honestly, I believe right now what you're getting is Biden's executive order playing out. And, you know, this is a fight for power within the crypto space, and they're doing that by destroying the competition. So what I want to do now that I've rambled on and given you my kind of overview, just to say it once more, Sam Bankman-Fried was 100%, look at the shoulders he was rubbing up against, a Trojan horse, likely set up to fail. And we're seeing that because he didn't just take himself with him, he took the whole industry, and he's given regulators every need. And I'm for regulations, by the way, guys. I'm against over-regulating. But what you're seeing right now is a controlled demolition, and Silverbank was one of them. Silverbank actually played quite a critical role for the infrastructure of how crypto companies like Coinbase and all these interact with one another financially. And I'll just explain why quickly, and then we'll get into the whole Silvergate story, and then I'll wrap this video up. We'll look at the JP Morgan situation, cutting ties with Gemini, and then I'll love and leave you. So Shen Leverage provides secure institutional-grade access to capital through US dollar loan collateralized by Bitcoin. We create customer lending solutions, and we work with regulated, established custodians to ensure that your collateral will never be rehypothecated. Plus, we offer near real-time loan distribution and repayments through Silvergate's exchange network, Shen. Use Shen Leverage to unlock the value of Bitcoin and create a customer lending solution for your organization. So it was quite a big deal. Low rates and flexible options. Talks about Bitcoin back lending solutions. Build the future with Silvergate. You know, these guys for all, you know, they're a bank and was one of the only crypto banks that have now been taken out. And the kind of fall for Silvergate, I'll go ahead and read this short and sweet article, and then I'll leave you to it. But it essentially, because of FTX, there was kind of a bank run that took place, and one that they've just not recovered from. And it's now damaged the entire industry. I just want to say this because, and this is one thing I've been saying recently. So I have a positive outlook on the crypto space despite everything that's going on right now. For the first time in again, you know, when this executive order came out is when we were getting out of the markets. We mitigated the majority of damage last year. We got back into the market at the start of the year. Knowing regulations coming, and I actually think it's a bullish thing for the industry in terms of, well, broadly, from a sort of libertarian freedom point of view, potentially not. But from an industry that requires or is looking for mass adoption, that only happens of one of two ways. Either it exists in an unregulated space, and that's through the sort of toppling of the powers that be, the governments, or the governments regulate it and bring it under their jurisdiction. And that's what's going on right now, guys. So without further ado, guys, I just want to read through Silvergate Bank, end of the road for a decade-long crypto experiment. These guys have been a bank for a while. Certainly back in 2013. You've got Elizabeth Warren saying, as the bank of choice for crypto, Silvergate's bank's failure is disappointing but predictable. I warned of Silvergate's risky, if not illegal, activity and identified severe due diligence failures. Now customers must be made whole and regulators should step in against crypto risk. So it's a controlled, demolition that's taking place right now. It sucks, but it is what it is. I'll go ahead and get rid of my face and we'll go through this article. Silvergate Bank, end of the road for a decade-long crypto exchange experiment. Once a traditional bank, Silvergate jumped into the crypto hype train back in 2013. Silvergate Bank, once a traditional financial institution, today faced the music and voluntarily decided to liquidate its holdings, bringing an end to Silvergate Capital's 10-year experiment in the volatile cryptocurrency market. Here's what happened. Silvergate Bank, the sales pitch. To clarify, Silvergate was not a crypto bank in the Celsius network sense. It didn't facilitate lending and borrowing of cryptocurrencies. It was also regulated by the Federal Deposit Insurance Corporation. This is a regulated institution, ladies and gentlemen, just like a typical bank. Rather, Silvergate was a bank to the crypto institutions. Here was its rough sale pitch. I'm paraphrasing. Silvergate was a bank regulated by the FDIC, the Federal Reserve, and the California Department of Financial Protection and Innovation, just like any other standard bank. Silvergate Bank was the first regulated bank to develop a real-time payment system for the crypto markets known as Silvergate Exchange Network Shen. Now, isn't this funny? Even in Jerome Powell's testimony yesterday, or a couple of days ago, sorry, he was asked about CBDCs and he said, look, CBDCs aren't likely going to be here anytime, immediately. But what will be is real-time payments. And that'll be done by the Fed now. There's dots that are lining up that, lead me to have the kind of views that I have and that I've portrayed to you guys. And that is that it's a controlled demolition taking place right now within the crypto space. And what comes out of this, like a phoenix from the ashes, is the next asset class, the next big thing, the next sort of, we haven't seen that big moment for crypto yet whatsoever. And people say, oh, no, we have, because we got to $3 trillion. $3 trillion is nothing in the grand scheme of things, guys. The dot-com boom at its peak, this is back in 2000s or going into 2000, got to $5.5 trillion. That was back then. $5.5 trillion back then is like 20 probably today. So Silvergate, so isn't that interesting? So Silvergate didn't hold any crypto directly, but the network acted as a payment system for crypto exchanges and institutions to exchange dollars or euros in real time. This was extremely useful for the 24/7 nature of the cryptocurrency market. Silvergate didn't charge client fees to use the Shen network, or Sen network, sorry, but it did benefit from the large sums of non-interest bearing deposits it received, which it invested in government bonds. Very interesting. According to the bank's last financial update, the fourth quarter of 2022, Silvergate had 104 digital assets exchanges on its client list. Coinbase was one of them until jumping the sinking ship. Silvergate also had 1,025 institutional digital asset investors on its client base, but it is obvious where the money was being made. Of that $3.8 billion in deposits held by crypto clients, over 75% came from digital asset exchanges. Since we're on the subject of financial statements, there was a few more red flags in the report, namely a 500% increase in short-term debt to $4.3 billion US and a 250% increase in interest-bearing liabilities. Total net loss for the fourth quarter approached $1 billion. Shocking figure. but how did it get so bad in the first place? So let's take a look at it, guys. Market tank, clients jump. The obvious answer is the cryptocurrency market went downhill, which of course they did. Over $2 trillion was wiped out from the cryptocurrency market in 2022. We got out. Starting in May, we got out in March. It's all public, by the way, guys. With the collapse of Terraform Labs and culminating with the collapse of FTX. So we actually shorted Terra around, I think it was around about $44 maybe we got in short. Not to brag. So FTX, by the way, was a huge supporter of Silvergate. Silvergate was intrinsically linked to the formation of Sam Bankman-Fried's FTX, formerly the second largest crypto exchange before imploding in a whirlwind of criminal fraud and severe professional misconduct allegations. Life as a crypto firm can be divided up into before Silvergate and after Silvergate. Bankman-Fried once said of Silvergate, "It's hard to overstate how much it revolutionized banking for blockchain companies." Absolutely. Like I say, the Shen or the Sen kind of network is crucial to how these banks move around with one another, or these crypto companies move around with one another. That would have been a stunning endorsement back in the day, but it became a curse when Bankman-Fried turned out to be one of history's greatest fraudsters. Anyway, the market enjoyed a strong rebound in the opening months of 2023, but there were cracks festering within Silvergate. Those cracks became significantly wider in early March when Silvergate delayed its annual earnings call, saying that it probably wouldn't be able to meet extended deadlines due to the ongoing investigations and internal audits. Silvergate initially requested additional time to allow for audit, including the evaluation of the effectiveness of the company's internal controls over financial reporting. More foreboding still was the group's ambition or admission that significant financial losses felt in 2022 were impacting Silvergate's ability to operate as an ongoing concern in the years ahead. High-profile clients, including Coinbase, Paxos, MicroStrategy, Circle, Crypto.com, Bitstamp, Galaxy, and Gemini, began publicly distancing themselves from the bank. All eggs in one digital bank basket. But back up a bit, Silvergate didn't hold crypto assets; it held cash. Furthermore, its investments were mainly in government bonds, not risky loans. What gives? As the Wall Street Journal said today, credit risk on the risk not being paid back isn't the only kind of risk banks face. What Silvergate faced was interest rates risks in the form of surging central bank rates, rate hikes, which saw bond prices fall sharply. Since 2013, under Alan Lane, Silvergate pivoted its business model to catering a niche thing called cryptocurrencies. We began pursuing digital asset customers in 2013 and have been deliberate in our approach to serve this community since then. The website still reads as a sort of sobering reminder. For a long time, it was laughed at all the way to itself. When Bitcoin and cryptocurrencies became mainstream and the market doubled, quadrupled, sextupled in value, so did Silvergate's balance sheet. A myriad of cries later, and the market absolutely tanked, severely impacting pretty much all of Silvergate's banking's major clients and carving up its balance sheet. Facing the inevitability of March 8, Silvergate announced the following in light of recent industry and regulatory developments. Silvergate believes that an orderly wind down of bank operations and voluntary liquidation of the bank is the best way forward. One gets the sense of running theme in Silvergate's business direction: focus on one particular client type and invest particularly. So this is it, guys. They basically filed and they're winding things down. Do you need to worry? Well, the thing is with bankruptcies is you're not going to have their holdings, which they don't hold crypto, hit the market. Maybe there are repercussions with clients that they have. But I think this is the thing, like, you know, the kind of the level of badness that you need to get the market tank is at a very high standard with FTX and of course Luna. And I'm not worried about Silvergate Bank necessarily affecting the market. However, you know, it's really another one bites the dust. And unfortunately, you know, these guys have gone the way. And I still stand by my statement at the start of the video. I think that this is a controlled demolition in order to bring crypto in line with the agendas of the US. Predominantly, but other nations as well. So JP Morgan is cutting ties with crypto exchange Gemini. We are going to see an onslaught of regulations. I wonder if there's anything more to this, and we're going to hear anything come out in the future. That's all I've got for you guys. That's exactly what happened with Silvergate. My thoughts on it. Let me know yours in the comment section. If you've enjoyed the content, a like is always appreciated. So is a comment, and I'll catch you all in the next one. Thanks a lot for watching, ladies and gents.